Hello students, now we will do question number 3. Pass the entries in the books of Ganguly and Sons assuming all transactions have been entered in the state of West Bengal. So this is intra transaction within the state. So in this, the question here says that assume CGST is at the rate of 6% and SGST is at the rate of 6%. So both at the rate of 6%. So let us start with the question. So here the date is not been given. So we will write down here. Number 1. Purchased goods for 2 lakh and payment made by check. So we will write here purchases account will be debited, and since it is purchase we will have to pay some CGST and SGST. So we will debit this. Now this is not an expense, this is an asset, because whenever you will sell the goods you will recover back here the GST that you have paid. So input SGST account, this also we will debit, and since it is payment is made by check, this is not a credit purchase, so we'll write here to bank account. Now let us write down the amount. 2 lakh, 6% of 2 lakh is 12,000, and same here also will come as 12,000, and then here total will come as 2 lakh 24,000. Okay, let us write down the narration. Purchased goods by check. The next we have is the second number 2. In number 2, sold goods for rupees 1,60,000 to Devki Nandan and Sons. So here Devki Nandan is becoming the receiver. So we will write here Devki Nandan and Sons. We are going to debit, and sales will be credited according to the nominal account. Sales will be credited. So here to sales account, and then when we sell we get back our GST. So we have here to CGST account to output SGST account. So here the sale is for 1,60,000 and 6% of this is 9,600, and then again we have here is 9,600 because both are 6%, and the total will come as 1,79,200. So here we'll write the narration. Goods sold on credit. Okay. Now next we have is purchased goods 50,000 on credit. Now the supplier or the creditors are the one from whom we purchase goods on credit. So here we will write down number 3, purchases account debit, input CGST account debit, input SGST account, debit to creditors. Creditors are the suppliers from whom we are purchasing goods on credit. Okay, so here how much is the purchase? Purchase is your 50,000 and 6% of 50,000 is your 3,000. Same here, 3,000, and to the creditors we will be giving 56,000. Okay, we'll bring this down. Next we have is number 4. Okay, so here number 4. Number 4 says paid for printing and stationery 4,000. Now here printing and stationery is your expense. Expense account, we will debit, and since it is expense we will write input CGST account. This also we will debit, input SGST account. This also we will debit, and this is paid, nothing is written here, so we will assume that this is paid in cash. So we'll write here to cash account. So here printing and stationery, paid for printing and stationery we have. Okay, so let us remove this expense so that you will not get confused. Okay, so here we have is 4,000 and 6% of 4,000 is 240, and here total will come as 4480. Narration will write down here printing and stationery paid. Next we have is received interest, number 5. Now since received interest is your income, what we will do is we will credit the output CGST and output SGST. So this also is received in terms of cash because nothing is written there. So cash account, debit to interest received account to output CGST account to output SGST account. Here the interest received was 5,000, 6% of 5,000 is 300, and the total here will come as 5,600. Okay. Then here it says that paid for advertisement rupees 30,000 by check. Okay, so number 6 here we have is advertisement. So this is expense. So in expense we will write down input. Okay, so we will write here advertisement expense account, debit, input, CGST account, debit, input, SGST account, debit to bank, since it is paid through check, to bank account. Okay, so here how much was the advertisement expense? It was 30,000 and 6% of 30,000 is 1800 and the total is coming to 33,600. Okay, so we are done with this, with the last one. Now here in this question we will do the calculation once again, like how we did for question number 2. Okay, working notes, same way we will have the total input CGST and all the total input CGST that we have on the debit side we will add, and all on the credit side we will minus. Like here we have 12,000, then here we have 3,000 that will be added, then 240 will be added, and okay, so we have the amounts 12,000 plus 3,000 plus 240 plus 1800. So this will come as 17,040. Okay, so let us change here. We'll put the font rupee. Okay, the next what we will do is we will find out the same total input SGST. Okay, so this will be similar, 12,000 plus 3,000 plus 240 plus 1800. So this will also come as 17,040. Okay, so here also let us put the rupee font. We have here rupees and here we will write down rupees. Okay, so same we will do is total output CGST. Now whatever is total output CGST on the debit side, whatever we on the credit side, whatever we have, like here we will add this, and if we have anything on the debit side, then we will minus from that. Okay, but we don't have any on the credit side, sorry, on the debit side. We have 300 here and 9,600 was We saw it. Okay, so here we will have 9600 plus 300. So this will come as 9900. Okay, we'll change here. Rupees and rupees. Okay, now same we will do is with the total output as GST. So it will come as same 9600 plus 300. It will come as 9900. Okay, again we'll change here. Rupees and rupees. Okay, now here if you notice that your output CGST is less, what is more here? Your input CGST. What we did earlier in question number 2, this is opposite of that. So we'll write here, since input GST is more than output GST, there is no liability to be paid to the government. Okay, so here since your output CGST is less, now when you purchase you are paying this much of GST to the state and the central government, but when you are selling you are getting less output GST you are getting. So there is no liability. No liability means you don't have to pay to the government, like there is no excess amount to be paid to the government. So here the whatever is the excess input CG, whatever is your excess input GST will be called as input tax credit. Okay, so your input tax credit, so let us calculate how much will be your input tax credit. The formula will be input CGST minus output CGST. So first we will start with this. So here the amount will be 17,040 minus 9,900. So this will come as 7,140. Okay, we will change here. This will come to okay, so it takes lots of time. Okay, then here we will change, we will do this as SGST and output SGST. So the amount will be same. Okay, we can copy and paste over here. Okay, the amount will be same. Now here the answers are coming different, 7140 and 7140. If you skip this last one, you will get the answer according to your book. Okay, so if you leave this last transaction, you're going to get the answer according to your book. Now here we will write down rupees 14280. Okay, that is your rupees 7140 plus rupees 7140. Will be carried forward, will be carried forward and will be adjusted in next month and shown on the asset side of balance sheet. Okay, so here since the output CGST is less, we got less money, so we don't have any liability to be paid to the government, and so this will be called as input tax credit whenever there is more of input than the output. When input is more than output, there is no liability, so it becomes as input tax credit. So next year we will transfer 7140 and 7140, total 14,280 will be carried forward and will be adjusted in the next month and shown in the asset side of the balance sheet. So there will be no journal entry for this type of input GST is more than output GST. Okay, so go through both the videos and you'll understand the difference. Just you have to be careful while doing this working notes. Thank you and have a good day.